Welcome to Immigrants Financial Freedom. Our live today means that you can ask questions about investments, tax, and legal, and you will get qualified answers because we have licensed and qualified professionals on this live. And I'll start with investments, and my colleagues VASYL and MARIIA will follow up on tax and legal matters. And if you have any questions, please write them in the chat below, and we will comment each expert on his or her topic. Having that, let me show my presentation. It's gonna be here. So I'm registered investment advisor, and my topic, of course, investments. You watch Immigrants Financial Freedom, so you know we have very basic videos like basics of credit score, basics of saving money, and then we have a more detailed video like the last one about 401k. The general idea is that you should make your money work while you sleep, and Warren Buffett famously said that, meaning you have to learn how to invest. Just saving money is not enough. I don't know if you noticed, probably you did, the inflation in the United States 2-3 years ago, it was record high, the highest in 40 years. Now it's stabilized a bit, but it's still around 3%, higher than long-term average in 21st century. That means the prices go up every year, and it means that if you have just savings, they're going to depreciate and lose purchasing power each year. So it's very important you invest, and the most popular investment in US by any means is the stock market. There are various types of stock market investments. All the studies show that about 2 out of 3 adults in the United States own stocks, meaning they are investors, they have some stocks ownership either through funds or directly they own individual stocks. And now let me outline a few moments about investments. In US, the government made all these types of tax advantage accounts to help you and actually kind of to stimulate you to invest. This account, this actually picture, shows the taxes with no investments account. So let's say the new immigrant came to the United States, never heard about any tax advantage accounts. So that immigrant made $100,000 and paid around $14,000 in taxes, and then opened the so-called taxable brokerage account and started to invest. That's a very bad tax strategy because in terms of investing, this person could have used what's called traditional ERA. The limit for traditional ERA last year was $7,000. By the way, for tax advantage account, you still have time to catch up. If you open the account in the last year, 2024, you still have time to catch up contributions and use those accounts. So you see the amount of taxes went down, but almost 1,500. And those money saved on taxes obviously were invested, and the total investment was $7,000. The effective tax rate went down. Now, if the same person works for the company, that means many employers offer 401k plans. That's probably even better choice because the limit is higher. You see 23,000 again. They lower the taxable base, and the tax instead of 14,000 now is $8,781. So huge savings on taxes. This goes to investments, and investments grow tax-free. Of course, I'm simplifying those things, but trust me, millions of people use those plans. And like I said, 401k is offered by employees. Now, the example from well-known company in New York, and you're going to see a lot of examples like that. Basically, if your employer comes to you and say that they have employee matching, that means they're giving you free money, actually. And What does it mean? The dollar for dollar, they're different, of course, matching teams, but dollar for dollar means that for each dollar you contributed to your 401k, you're going to get $1 from the company that goes into your investment accounts and belongs to you after that. Of course, there is a limit, like in this example from this New York company is 6% of the eligible pay contributed. So let me show how it works in numbers. That means if the salary is 100,000 per year, 6% limit is 6,000. In total, this 6,000 that come from employer and 23,000 that come from employee, total $29,000 that go to investments. Now, the greatest news, if you follow Warren Buffett advice and you invest those 29,000 into stocks, into ETFs, into mutual funds, they're gonna grow tax-free. And I've shown on the channel already simple types of investments, and I had detailed video about 401k, in fact. And in that video, I explained that if you contribute each year $29,000 and they grow tax-free, by the year 11, you're gonna have more than $600,000 in your investment account. That's the sizable amount. Even when you start with 29 per year, it took 11 years to get to this number. And of course, all of us have the retirement goals. At least I hope you think for that. But you can also calculate your retirement goal, like what amount of capital you need on your investment account to live comfortably without working, or perhaps working part-time if you want to model that. For returns, I used total stock market, which is now approximately 2/3 US and 1/3 all world, excluding US. The reasonable expected return for those types of investments would be between 7 and 9% long term. In 1 year, anything could happen, could be -30, -40%, but long term, it's a reasonable explanation to have between 7 and 9%. And again, this is a simple strategy. Usually the combination of stocks, bonds, international US stocks. There are also retirement strategies in 401k's account called target date funds. If you would like to learn more about that, please let me know in comments to this video, and I'll make a separate educational video about that. Now, it doesn't take a lot of time to invest. Usually those accounts, 401k, ERA, solo 401k, SEP, ERA, they are kind of automated. You would have there some kind of strategy, either from your financial advisor or you will do it by yourself. You send money to that account, the strategy executes the trades, and you got your money investment. And if you have 10 or more years, it's better that you sleep well and don't follow the market news. Usually, on average, there is a big crisis on stock market each 10 years, and there will be many moments pretty much every 1-2 years when the stock market correction happens, meaning the stocks go down by 10% or more. Thank you for listening to me. There are many educational videos on immigrants' financial freedom, and I'm always open to your suggestions for next videos if they relate to personal finance. Again, if you have any questions, please let us know in the comments. Please like this video, and I'm gonna stop sharing my screen and introduce VASYL, who is expert in tax. And as tax season comes to his hottest spot, I'm sure you gotta listen to VASYL and make adjustments and prepare for filing your taxes. VASYL?
Yeah, thank you, LYUBOMYR, for that introduction. And like I would cover some tips relevant for the foreign-owned businesses in the USA. So let me share the presentation with you.
Yep, we see your presentation.
Okay, great. So this slide has to do with the tax reform that became active in 2018, and some provisions were permanent, but some are set to expire by the end of 2025. But since Republicans are in control of the two chambers of the Congress, then quite a few of those provisions are expected to be reinstated. So the main so like one of the main provisions in that arena is qualified business income, and qualified business income has to do with the pass-through entities. So entities such as sole proprietorship is not an entity, but that would qualify for the qualified business income. And then pass-through entities such as partnerships and as corporations. Anytime where the income passes to the individual tax return and gets taxed on that level. There is a misconception about the S corporation because often foreign-born people think that they don't qualify because of the restriction that there cannot be more than 100 shareholders and they must be US persons. But one thing to understand that when it says US persons, it uses that term for tax purposes. So as long as you met substantial presence tests in the country for more than 183 days and you met that test, then you will be considered the US person. So you can set up your operations in the USA as a pass through. So again, for now, it's scheduled to expire that 20%. So the way the qualified business income works is there is 20% of your qualified business income can be subtracted from your taxable income when you compute the taxable income of your business entity. But but as I said, it's expected to be reinstated, but we have to wait for the legislative action to reinstate the qualified business income deduction. Regarding cross-border tax considerations, it's worthwhile to mention FIRPTA, which is for foreign investment in real property account, real property in the foreign investors invested in real estate in the United States, and there are special considerations for reporting the investments in the U.S. property if it is owned by the foreign people. It triggers additional forms and disclosures, but at the same time, we can use the tax treaties to minimize the U.S. exposure. It would look into permanent establishment rules and dividing the income between jurisdiction and figuring out which jurisdiction gets to tax what. So in case of the Ukraine American tax treaty, which celebrates 30 years this year, it has special provisions for different types of income, be it royalties, interests, dividends. So there are special provisions for the reduced tax rate depending on the source of income we are talking about. When we talk about tax credits, the beauty of the tax credits is that they reduce the tax liability dollar for dollar, unlike the deductions which are subject to the tax rate. And some of the credits are research and development tax credits. So the activity must be happening within the United States. So when you hire contractors for the research and development activity, that contract work must be performed in the United States to qualify for the credit. The basic idea is you have when your business in the US approaches different projects, it's good to think about what you innovate and what you try to improve on. The IRS says that if you have a hypothesis and uncertainty of the outcome, and it follows a scientific process in one of the STEM areas, science, technology, engineering, mathematics, sometimes they would allow certain things from soft sciences and on the social research side, but mainly the case for the R&D credit is much stronger when it is in the hard sciences area. So as long as you have the project that has uncertainty of the outcome, you're not sure if it is going to work, you have a hypothesis, then you have steps to test the hypothesis, and you document that process, and the expenses for that project. There is a formula to calculate that, but ultimately it amounts to something in the ballpark of 10% of eligible research and development expenses. So imagine if you're developing a new method to a new business method to engage with your clients. You may be building some custom software to facilitate the connection with your client base, and you incurred 10,000 expenses, for example, for that project. Then you can take 10% of that as the R&D credit. And you can innovate in different areas. It can be software, it can be formula, it can be business process, it can be business method, business model. So you have a broad spectrum of innovation. So the idea is to operationalize it so that anytime you approach some projects within your business, you cluster it into different projects based on the innovative idea that you are testing. And that will allow you to split your overall expense into buckets of expenses. And then based on those buckets of expenses, you can claim that R&D credit. Then work opportunity tax credit has to do with hiring certain groups of people. So, for example, for hiring U.S. veterans, the IRS gives you up to 4,500 per year, up to 2 years, so you can claim 9,000 tax credit over 2 years. Or if you hire people who low income people that have been unemployed for more than 6 months, when you hire categories of people like that, and there is a list, you can you can Google work opportunity tax credit categories, and you will see various categories where, depending on the category of the person you're hiring, the government uh, may give you incentives for hiring these specific groups of people. And the similar idea, related idea to that, not the same credit, but there is a related idea of apprenticeship. So you form an apprenticeship program, and usually you do it with the conjunction of the community colleges or universities. So portion of that would be training of these apprentices within the academic walls of college or university, and a portion of that will be training, hands-on experience at your company or your firm. So you certify that through the State Department of Labor, and then the government gives you credits like 4,000 per employee for apprentice in the first year, and then it goes to 3,000, 2,000, and 1,000 in the subsequent years. So you can get tax credits and pay less tax through apprenticeship programs like that. Then when we get to transfer pricing, it's making sure that when you have related party transactions, the prices that one company charges another related company is at arm's length, meaning that you base it off of specific market comparables, and you're not simply shifting your income and expenses nilly-willy between related parties, but you honor the section 482 of the Internal Revenue Code, stating that when there are uh, related party transactions, you must follow the benchmarks and document the market comparables. And you in certain cases, in many countries, there are thresholds where you don't have to do a full blown uh, transfer pricing study. You can use benchmarks, but in the United States, there is no de minimis exclusion. But still, if the scope is smaller and the amount of those transactions is not that high, so the more simplified approaches with benchmarking can be used, even though technically there is no specific de minimis threshold similar to what some other countries have. Then charitable contributions are another vehicle that you can use to reduce taxable income, and the rules depend on what you're contributing. So generally, if it's cash deductions, it's 60%, up to 60% of your adjusted gross income, and then the percentage lowers based on what you're donating. If you're donating stock or appreciated property, that percentage gets lowered in some to 30%, in some cases even 20%. But for cash contributions, it's 60%. And then if you use structures such as DAF, donor advised funds, you can accelerate those deductions. You can contribute 5 years at a time, and that will be counted towards your to reducing your taxable income in that year. For the office and business deduction, a lot of people think that in order to claim the home office deduction, you must be located in the United States. But unlike research and development credit, where the activity must be performed in the United States, not so for this one. You can have an office abroad, and the same rules apply. It must be exclusive use of your office abroad, and you measure the square footage. You must use it exclusively for your business functions, and you can write off the portion of your rent and utilities or mortgage as home office deduction for your business expenses. Some of the common pitfalls that I see working with clients, it's sometimes clients, I'm not they think, oh, we must make this tax return perfect, and they may be delaying the collection, or they may be having issues with collecting information. And of course, the tax returns must be as accurate as possible and be documented by records. But then if you run out of time to collect the data, and it will be beyond the extension. But for the most part, you have everything, just with a couple of missing pieces. What you can do, you can file the tax return and then amend it within 3 years if there are material differences based on the information that you were lacking at the time. But it's a it's the best practice is to file it as accurate as you can by the deadline, rather, because failure to file is more severe than failure to pay. So prioritize filing. And then of course, on the payment side, you can enter into different arrangements with the IRS. You can do a payment plan pretty easily if it is below 50,000 in tax liability, and it's a bit more paperwork if it's a higher liability than that. So you can negotiate the payment side, but it's absolutely crucial to meet the filing deadlines because of the failure to file penalties. Then maintaining detailed records of all tax relevant expenses including receipts. So this one, like even tax professionals overlook it sometimes. So like there is a recent tax court case, and this lady is an enrolled agent. So what she did, she said, I'm going to use the app. A lot of people use the app for their auto miles that they use for business. So she used this app, and she had the proof that on different dates she drove so many miles for business, and the IRS challenged the deduction based on the lack of proper descriptions. So she challenged that in the tax court, and the tax court said the tax court disallowed it also. And the reason the tax court disallowed that, because she simply said business trip. So the description said business trip, business trip, business trip. So the tax court said it was not sufficient because it must include specific details. What kind of business trip? What kind of business trip? Whom did she go to see? And like for what purpose? It must be more thorough description than that, rather than just say business trip, which doesn't really say the government much. If it was legitimate business trip, if it was necessary and an ordinary and reasonable expense. Then when we get about the proactive tax strategy for foreign owned people, then it's important to work with somebody that has his bearings between countries. If the that he can run projections for you based on understanding the language. Like say for projections, you don't need to translate that, but then if we do the actual tax return, then translations must be available in case the IRS asks for supporting information. And then it's making sure that like that people understand the U.S. taxes on the global basis, and because that's the case, it's disclosing what must be disclosed for the U.S. purposes, such as bank accounts. If on any given day the bank account under control of that individual was more than 10,000, and a lot of people misinterpret that rule because they think, oh, I never had the business account uh, 10,000 in my in any single bank account. And the important thing to understand that it's on the aggregate basis. So if it's combined bank accounts on any given day exceeded 10,000, that triggers the FBAR requirement. And then like once that income is disclosed, then it's making sure like whatever tax you paid, say in Ukraine, that the US gives you the foreign tax credit for the taxes that you paid in Ukraine. And then the another consideration would be the state level. States administer their own tax administration. They have their own rules. So it's paying attention that you're meeting your state obligations also, and you have the tax professional who help you stay within the guidelines of the state regulations for taxing that income. So some states, such as California, have the water edge exemption for corporations, but that applies for corporations, and then for individual cases, it requires a more thorough analysis. So here are some case studies for you to understand some of the cross-border tax issues that I run into sometimes. So like the first individual, so he came to this country and he didn't have a social security number yet, but he went ahead and applied for the and registered the company, but his social security number wasn't confirmed at that point. So the IRS treated him as treated the LLC as a foreign-owned LLC. So that triggered Form 5472 for companies owned more than 25% by foreign individuals. Well, he didn't have any idea that that was the case, and nobody advised him. So then he was surprised that the IRS hit him with 25,000 penalty for failure to file this informational form. So then I wrote a letter to the IRS explaining that it was a new taxpayer and didn't understand that the requirements for foreign individuals starting companies, and I had that penalty abated for him based on the facts and circumstances. So anytime you do reasonable cause penalty, it's very factual. It's based on the facts and circumstances of this specific case. So the more evidence you can provide and proof that you're not just making up a story, but it's a legitimate case scenario, then the higher chances there are for the IRS to abate penalties based on reasonable cause like that. Then, like the second example is a Ukrainian software company in three countries, and they were they entering the U.S. market, and they needed guidance on how to align the U.S. entity with their like worldwide tax strategy, and how the United States government is going to view their LLC, and how that dovetails into the other into the taxation that happens in Estonia and Ukraine. So it requires analysis of the treaties, and then the facts that each of those individual owners lives in different countries. So it again, it goes back to the facts and circumstances analysis and applying the treaties and provisions that would be advantageous in that specific individual's case based on the country of his residence. Then the third company has to do with two Ukraine relief nonprofits, and they like one of them was in the situation where they constantly innovate different logistics pathways to deliver the cargo to Ukraine as efficiently as possible. And what I realized that they qualify for the research and development credits too. And typically, nonprofits don't think in terms of research and development credit because they don't really generate income tax liability. But one interesting thing is that it's state specific. So some states, there are a handful of states, such as New Jersey in particular, that allows the sale of those credits to the companies that need those credits. So that creates an additional source of capital for this nonprofit to further the nonprofit objectives for this nonprofit. So it's figuring out opportunities that may not be obvious. Like it's like, well, come on, like why would nonprofits need credits? But if they can structure it and sell it to like syndicate or to the company for profit companies that need those credits, it can infuse the capital. But then it's also coordinating that with the lawyer, making sure that it's documented properly, and it doesn't cause the perception that there are some private elements involved, or it may benefit some specific individual interests for environment. So it's making sure that it's structured and documented properly. Then it's going back to the foreign owned companies and Form 5472. And so, some of the pitfalls that I see here: not documenting intercompany transactions such as shared expenses, royalties, insufficient detail, because there may be too generic descriptions without sufficient detail, or like assuming minimal activity, or saying, oh, it's dormant. They're like, oh, come on, we just registered that entity in the Delaware, we don't really do anything. So assuming that just because the entity is dormant for now, assuming that it means zero tax requirements. So it can be, so from the tax perspective, that's the case, but there are informational forms such as 5472 that would charge $25,000 penalty for failure to file that informational tax return. So just because you don't have income doesn't mean that you also don't have some informational tax requirements. Then here I alluded to this briefly, that this year is I mean, last year was 50th anniversary of Polish US tax treaty, and this year we celebrate 30 years of the Ukrainian tax treaty. It originated in May 1995, so that 30th anniversary is coming up in May. And then here are some of the provisions. So regarding withholding rates, it's lowering those withholding rates on dividends, interest, and royalties. And then in the area of permanent establishment, it provides clear guidelines in what cases the US would have jurisdiction, in what cases Ukraine would have jurisdiction over that income. And it's, as far as like, I mean, it provides the for the information sharing between the state tax authority in Ukraine in IRS, especially in the FIRPTA, or the of the real estate ownership in the United States by foreign individuals. So here are some of the relevant articles from the US-Ukraine tax treaty. So Article 5 on permanent establishment, then Article 7 on business profits, Article 10 on dividends, Article 11 on interest, royalties is Article 12, then relief from double taxation, Article 24. Interesting thing to note about the tax treaty is that the tax treaties still have a savings clause, and that saving clause means that even though, like, yes, there is a treaty, but the US government still reserves the right to disregard the treaty. So yeah, best case scenario, they don't challenge anything, but they always reserve the right to say, yeah, you know what, that's true, but check out the savings clause. We still reserve the right to disregard the treaty if we want to. So again, it will be case by case if the IRS were to decide to challenge the treaty or say we don't want to follow it. Yeah, so here's Article 25 on non-discrimination, that the enterprises of one country should not be subject to more burdensome taxation than in the other countries than its own residents or nationals. Then limitation of benefits is Article 22. So it's making sure that these individuals and don't double dip, that they don't take excessive benefits. So the goal for you is to be aware that yes, the United States taxes on the worldwide basis, but at the same time there are tools you can use, such as claiming foreign tax credit for the tax paid in the foreign jurisdiction, and also using the provisions of the tax treaties. So if you do have any questions or want to some more to delve deeper into your case, here's the contact information that you can note in case you have any tax questions. Yes.
Thank you, Vasyl, and we will provide your contacts in the description to this video if you'd like to consult individually, but of course it's going to be paid consultation in most cases. But now is your chance to ask for free. I do see one question in the chat, but first of all, let me ask my own question. I've heard that President Trump gave a speech in Davos, and there was some mentioning of 15% corporate tax, but of course it's a broader context. But the interesting thing is he's gonna punish countries that try to tax uh, Google, Alphabet, Microsoft, Amazon, that try to tax those American corporations doing business in other countries. So that could lead to some tax wars. And I just wonder if you see any risks coming from that side.
Yeah, so like all the talk about canceling like Biden's initiative to conform to the international provisions for BEPS in Europe, in OECD countries, it's called BEPS, base erosion and profit sharing. So the idea behind that was to come up with the minimum tax on large corporations with revenues with $1 billion, and then the President's Biden administration, a firm that created its own version of the minimum tax on the profits of large corporations like that. So now Trump comes around and says that he's gonna push for the legislative action to get rid of that tax, and in order to relieve that pressure from large corporations. And what he like said about like hitting other countries with tariffs and like adverse actions for taxing the U.S. companies under the OECD tax rules. Yeah, he talks about that, but it will take the legislative action by Congress to change that.
Yeah, thanks. I guess that was sufficient because there is too much, unknowns. This broad concept is too wide. I have a simple question for you from our active viewer, Alina, and she asks if business sells products nationwide in all states via online platform, does it need to collect sales tax?
Yeah, so it's a great question because besides we were talking about foreign jurisdictions, but interesting thing is like say we have entity from New Hampshire doing business in New York, then for New York purposes, New York calls that entity foreign entity. And the reason it's called a foreign entity because it comes from a different state jurisdiction, New Hampshire. So they use the term, this is a foreign entity. So, when you get into like sales tax, usually the basic rule is if it is tangible products that your company is selling, it's subject to sales tax. If it is services, then it is not subject. But again, it's very simplistic. Each state has its own code regulating the sales tax. So you have to dig through the code and see the specific provisions. For example, in New York, like cleaning for the residential buildings is not subject to sales tax, but cleaning of commercial buildings is subject. So again, you need facts and circumstances analysis. But to answer your questions about portals, yes, the states have portals. So first, it's registering the entity with the Department of Revenue for the sales tax license, if you do have that sales tax requirement, and then you can submit sales tax returns and pay the sales tax through the portals.
Thank you, Vasyl. And let me ask a question from Alina that was addressed to me. If a person is temporary in US, no green card, no citizenship, does it make sense to invest here? I'll simplify the answer as Vasyl did as well. So let's assume this person wants to live in the United States and she will be proactive, looking ways to find a path to the green card or the citizenship. In such circumstances, I'd say yes, because the immediate tax savings and benefits if you invest as US person using those tax advantage account. Compare that to situation when a person came on work visa, let's say L1B visa, some other type of visa, or even you in uh, humanitarian parole for Ukrainians in that status. and that person plans to leave in, I don't know, 1, 2, 3 years, in that case, it still makes sense to invest, but using taxable account, meaning it won't be frozen, and if you move out of United States, you still own the account, and there are no restrictions on you withdrawing or depositing money. Having that, I would like to introduce our third speaker, and we're gonna talk about legal tips. Maria, please introduce yourself, and it's your time.
Hello, thank you so much for having me. Thank you so much, LYUBOMYR, for inviting. And of course, we follow immigrant financial freedom. Thank you for the work you're doing. Thank you, VASYL, for your presentation. Let me share my slides as well.
Yep.
My name is MARIIA KHORUN, and I am a New York licensed attorney. Proud Ukrainian American, active in my community. If you look for nonprofits that you want to support here in the United States, let me know. I'll be happy to provide you with a list of people who are doing good work. I work with nonprofits and small businesses on questions pertaining to formation, legal compliance, contracts, trademarks, some tax questions. I'm originally from Ukraine, studied in Odessa in Ukraine, and then here in the United States at Duke Law School. Since this is a conversation with immigrants, I thought that I would give you a little assorted bag of cookies sort of presentation, so that I hope hopefully you will find it useful and informative. And first of all, when immigrants come to the United States, they need to understand that this is a country with a well-developed legal system and also complex legal system. We have multiple levels of regulations here in this country. We have federal laws that pertain to all states and all territories. We have state laws that pertain to a specific state or territory. And we also have some local laws and ordinances that may be applicable only to a specific city, town, or village. And it's important to understand that this regulation may make or break a business, may help business people develop their business, or not. And so why it matters? For example, in the United States, on the federal level, cannabis, marijuana, is not it's not legal to sell it. However, 39 out of 50 states do permit businesses to sell marijuana. Here in New York City, city permits these businesses, and so it's interesting to observe how this industry is growing and developing. So it is impossible for these businesses to have access to federal loans or federal grants. Imagine COVID happened again. Many small businesses received Small Business Administration grants and loans that assisted these small businesses and provided a lifeline. This kind of business will not be able to receive it. It may not be possible to have a bank account with your favorite bank that you like. So it is important to understand whatever you're doing. Is it legal in every state? Is it regulated? How does the federal government look at it? So one consideration for you. Another consideration is for local rules, and how VASYL mentioned about the sales tax that may have different percentage, that may have different procedure how to collect and who needs to pay, who needs to collect that sales tax and who doesn't. That example with the commercial cleaner and the residential cleaner sounds absurd, but it's not, because the city regulates this kind of business scenario. And so small businesses especially need to understand that they may need to have permits, local certifications, permissions to do business. For example, I have a prospective client that wants to run HVAC business, and in one county the county regulates, but there are towns here in New York that also regulate that kind of activity, so air conditioning, repairs, stuff like that. And so it's important to understand what kind of permit that business needs to be able to legally conduct that business and not get into fines by local authorities. Another example is food carts here in New York City. When you come, you see there are so many different food carts that sell breakfast items, that sell lunch, some rice and meat and vegetables and hot dogs in Central Park. Those are regulated. Only vendors that have specific city license can run this business. And unfortunately, for many aspiring food cart entrepreneurs, those licenses are very hard to get. It's just a very limited number of licenses that the city issues, and there is a backlog. So you may have a brilliant business idea, and because of a local regulation, you may not be able to do it. So for you, you need to explore. America is a very large country, and there are opportunities in other locations. So something that's not permitted or practically impossible to do in one location, you may be successful in a different area. Also, for businesses, I would encourage them to understand that there are regulated businesses. I remember meeting a professional coming from a different country, and then that person told me that he's doing this business, he's developing this professional services business so that his kids are secure and that his kids can inherit this business. Well, in America, unless you are a licensed professional, most likely you will not be able to inherit your mom or dad's professional business. For example, legal services, attorneys. You must be an attorney to be able to be a part of a law firm, be that law firm partner, or doctor. Or only, real estate brokers that are licensed can have access to real estate listings and provide real estate services. Certain businesses may require federal, state, local certifications and permits. Think about banks. Who can open a bank? You need to receive multiple certifications and permissions to do that, or credit unions, or even a school. You wanted to register a school. Well, in New York State, Department of Education regulates anything that has the word school in the name. And so you will not be able to register your business containing the name school. Public companies, those that LYUBOMYR mentioned for investment opportunities for regular investors, those companies are regulated by the Securities and Exchange Commission. And so when you are buying stock of a public company, or you're trying to become investor to that public company, you need to understand the landscape, and it's heavily regulated.
Maria, sorry to interrupt you,
Yes.
but I'm not sure if you're changing slides, because we just see your first slide. Is how it's supposed to be, or you're changing them?
Oh yeah, I am changing. Let me see.
Okay,
Sorry.
try to
I
share.
am on slide 6.
Yeah. I was first wondering, not understanding something wrong. It seems you were sharing other screen.
Let me see. Can you see it now?
Okay. Yeah, we see the slide kind of small. Let me try. Yeah, this one is probably better.
You see regulated businesses?
Yes.
Okay, so that's what we were talking about. Sorry about that. I did not see myself. I did not see how the slides looked. I only see the slides in front of me right now. So non-public companies, those companies that are private, they don't have stock that's traded. They're family owned, for example. They're closed corporations. They're only a number of shareholders. Also, it doesn't mean that they're regulated, but just be careful what you're getting into, because that stock that you get, that share of a company that you're getting, you may not be able to sell it easily. So need to make sure you understand, again, the landscape that pertains to those companies. And since I work with nonprofits, I also added nonprofit organizations here. Those organizations are charitable organizations, foundations, private foundations, 501c3s. That's the keyword usually for these organizations, and they are created at the state level. So each state regulates the formation of a nonprofit organization, but in terms of their tax status, to be recognized as a tax exempt organization, not to pay taxes on its income, and make sure that contributors, donors can deduct their charitable donations, they need to receive the IRS tax exemption. So they are regulated by the IRS. Okay. Something that's always important to keep in mind is if you, as a business owner, are properly authorized to work. And we see with many people, immigrants who came on temporary programs such as Uniting for Ukraine, more generally humanitarian parole, most of these people received work authorizations, and so they didn't have to worry about not being able to work. Now, with the changes in the administration, some humanitarian parole statuses were already canceled. This is a question of how to run a business if you are all of a sudden not legal here in the country, or you don't have a work authorization. And so generally, and I am not an immigration attorney, you will have to talk with an immigration attorney. This is just something for you to consider when you launch your business. LYUBOMYR mentioned, when you have your business, are you here temporary? When you invest, are you here temporary, or are you growing your business so that you can then get some sort of investor visa, something for you to be able to remain here permanently, get a green card, and eventually citizenship? Just have these points, consider these points, because you don't know how your situation may change. And also, again, talk with a licensed immigration attorney about this, but certain activities may be considered passive income activities, meaning you don't have to work every day running your business, developing your business, meeting with the clients, meeting with the customers, making deals. You invest by LYUBOMYR's help, and this is growing your net worth, your income. Day trading, on the other hand, will most likely not be allowed without work authorization. So again, for you to think, as an immigrant, to think what kind of activities you can or you cannot do if you have or you don't have work authorization. And of course, establish a plan going forward. At least consider what will happen if I lose it. How am I going to run my company, hire a manager, or I'm going to sell it altogether? So consider these. When I came from Ukraine and I met somebody who was called notary, I remembered what a notary was in Ukraine. And to be a notary in Ukraine, you need to be a trained lawyer. And notary in Ukraine is transactional legal professional that assists with estates, assists with real estate transfers, very much complex legal work. Here in America, notary or legal assistant or paralegal does not mean that this person is licensed and admitted to practice law. This person may be a consultant of sorts or may perform certain function like notaries do, but it doesn't mean that this person is a licensed attorney. I happen to be a notary and attorney, so it works for me. But I just wanted to make sure, again, people understand when they deal with professionals like CPAs, like lawyers, enrolled agents, paralegals, legal consultants, other business consultants, they understand that this area, like I mentioned before, with regulated businesses, it's regulated. And not everybody can have access to that title, attorney or CPA or registered advisor for financial services. And you need to be careful when you work with people and understand what they can and cannot do for you. Some lawyers can specialize in a certain area. For example, I mentioned before immigration law. Immigration law is federal law. That means that if you're based in Florida, you can work with an immigration attorney who is based in Pennsylvania, if you like that attorney. Tax law is federal. Again, if you like your Florida with no state income tax, you can work with a New York licensed attorney who does tax law. So consider this. So like I said, notaries, consultants, paralegals, legal assistants, they cannot give you legal advice. Most likely they can help you with some form preparation, but not a legal advice, not a legal opinion, legal memorandum, cannot represent you in court generally. And something that people don't think about, but only attorneys have attorney-client privilege. That means that anything you disclose to your attorney is confidential, and only in a very limited circumstances that attorney may disclose to law enforcement agencies some information. But attorneys value attorney-client privilege, and it is very random when very rare when attorneys would disclose anything, because this is the protection that we value, the protection that allows us to have a candid relationship with our clients. So other professionals or other consultants don't have this privilege. They don't have attorney-client confidentiality privilege. I hear from businesses, from business-minded people, this question a lot: where to form a business? You know, generally, if you live in a certain area and if you plan to establish your business location there, if you have clients, customers there, you have your assets, that's where you would register, you would form your business. There are, of course, additional considerations. If you can make it in New York, you can make it anywhere, right? It's a great place to have a business. Lots of people live here, and so many businesses try to come to New York. Think Airbnb that came to New York and for a couple of years was very successful here before the city put a ban on short-term rental arrangements. Anything that's below 30 days, you cannot rent. So New York is a great place, but then do you need access to New York, or you can operate from a different area? Of course, it's also very prestigious. Delaware, many companies like to register in Delaware, and most of the time it makes sense for those companies that will seek investment, that will want to attract investors into the company that are going to grow, because otherwise I don't think it makes sense if you're based somewhere locally. Now, Wyoming, Nevada are the other two choices for people, for business owners who want to protect their privacy because they have a stronger protections for privacy, who owns the company, that information is not publicly available. And of course, some tax advantages like Florida, no income tax. So you can consider and decide what makes sense for you. So this is an example of a roller coaster that we are riding since last year, the beneficial ownership information reporting requirement. So what this does for certain companies that are called reporting companies, that are considered reporting companies, think your LLCs, think your corporations, small companies that are not otherwise regulated, for example, not regulated by the Securities Exchange Commission. These companies were supposed to provide their beneficial owners information by the end of the year. Now there was a lawsuit, and now this requirement is not enforced. It's sort of on a pause, but it doesn't mean that it will go away. Many people who are pro-business are optimistic and believe that this requirement will go away, because even 4 years ago, President Trump was not supporting this BOI requirement, and so now that he is in the office, he may want to get rid of it altogether. And so we just need to watch, and I put a link here for you to follow for any developments and updates. And you see it ends with gov, with gov, means that it's an official federal government link. So for you to make sure you know the latest details that are also official details. Something for businesses to consider is how to be competitive. Something that I see businesses do, they get certifications if it is a veteran-owned business or woman-owned business, or it's ethnic minority that owns business. And what it does, it gives access to funding, and these companies can compete in governmental contracts and grants, which is always a good idea. So this is for you to consider and see if you qualify and if you want to get that kind of certification. Of course, filing for trademark protection if you develop your brand and you want to make sure nobody else is using it, that's what you would do. Copyright, if you created some original work of art, some text, a song, you would want to protect it, and these protections are strong in the United States. And of course, contractual protections. You can sign agreements with your clients, with your vendors, with your workers, with a thought and goal to protect your know-how, to protect your business secrets. And usually non-disclosure agreement, non-compete agreements are the agreements to have. This is an example here from New Jersey. New Jersey and New York area will host World Cup in 2026. So very exciting for soccer fans. But I also have this as an opportunity for you to compete and engage and reach out to the organizers, because they're looking for different service providers to assist with this event, and different products and goods that can be sold at that event. So that QR code will lead you to the registration form that you can leave your initial interest. So I encourage everybody to consider. Thank you for your attention. Thank you for the opportunity. I hope what you heard was helpful.
Yeah, definitely helpful. And I have an interesting question for you. Obviously, since we are the channel for immigrants, a lot of talk about the ending of the birthright citizenship when the baby born in the United States. And of course, some courts already stopped that order. And so I'd like to clarify about this beneficial owner information report. which I filed because it took me 5 minutes.
Good job.
I see no problem with that. But let's assume, that there will be a complexity for some business owner. He is following this roller coaster. And let's say at the end they'll say, "Oh no, you must have filed and you didn't." So is there like a fine when there are so roller coasters and the person doesn't have to watch all this, but is it safer to file? What would be your recommendation when those legal battles are going on?
So if you are okay with disclosing your beneficial owner's information, that includes passport information, biographic information, you don't have any issues with that, sending your passport to the federal government and submitting it and not worrying about it, do it. Because last year, when that BOI requirement was still in effect, we of course assisted multiple small businesses in filing these reports, and they sleep soundly. They don't have to worry about what's going to change or not. But of course there is a group of people that believes that why would the federal government want to know my information? I file my taxes. In the tax return, you can see who owns. We pay the taxes. I am registered. I formed my business at the state level. The state sees that I'm operating business. Why this additional burden? Like, what are we trying to accomplish? Is this sole proprietor who is running her business, cleaning business, or some professional services, is she really trying to launder money? And like, what is happening here? And so of course there is a group of people who is opposing it, and like I said, President Trump is one of the people who are not a fan of BOI report. But we know that in other countries, including Ukraine, beneficial owners are disclosed. And so this is, again, I guess, this idea that America was trying to move closer to the European standards, maybe. But it is America. It's a different country, very complex. So I would say, if you don't want to worry, file it. Like LYUBOMYR said, it doesn't take a long time, and you can do it. You can read frequently asked questions. If you have a more complex structure, reach out. We'll be able to assist. We'll be happy to. If you don't mind the drama and you have nothing to do and you want to follow the drama. So far, there are no penalties for not filing. It doesn't mean it will be the same. So it's up to you. It's America. It's a free country.
Yeah. Thank you for this optimistic answer, Maria. And I'd like to remind all the viewers that we're gonna provide VASYL's and Maria's contacts in the description if you'd like professional consultations. You watch Immigrants Financial Freedom, so you obviously heard about me. And please like this video if you're watching it now. That means it was very useful to you. Maria, VASYL, thank you for your time.
Yeah, thanks so much, LYUBOMYR. Appreciate you inviting us.
Thank you so much.